Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And if you're looking for undervalued investment opportunities, you're looking for financial education, you got questions about the market. You're saying, I don't understand XYZ. Someone explain this to me. Put it in the comment section, I can help you out. I'm reading through the comment section. I'm answering a lot of comments because I think it's important that you guys get answers and everybody understands this as best you can about some of these questions. Would love to hear someone discuss how the uranium bought up by Sprott, etc., will impact spot prices when it comes back to market. Will this cap peak spot compared to 2007? No, it's going to move that peak way up. And what's going to happen? This is all. Remember, guys, this is not facts. I'm just speculating. This is a huge speculation. If Sprott comes back and they can put it on the New York Stock Exchange or NASDAQ or wherever it can go, it's going to be access to a lot more capital. That means that other people can put money into that fund, which then that fund is going to have to go out and buy physical uranium in the market to store it in that fund. Here's the problem that I see, and it's not a problem. It's a problem for the industry. What if they open this up, they put it on the New York Stock Exchange, and you get a ton of inflow of capital, like a massive amount? Let's say that the fund has to buy 30 million or 40 million pounds. What if that 30 or 40 million doesn't exist? What if they go out on the market and say, we want to buy 30 or 40 million pounds of uranium? I know that's a lot of money, but you could see a flood of money come in. I mean, a massive amount. And they have to buy the physical. If the physical doesn't exist, let's say there's 5 million pounds out there, they buy the 5 million, they're like, well, we need 30 million more pounds. Where are we going to get this? What if nobody can come up with it? Like, what does that do to price? I don't know what happens at that point. I mean, you're literally at like a checkmate for you might be a checkmate for like a year or two. Does price go to $1,000 a pound? It's mind blowing because if the physical doesn't exist and no one's mining anything right now, the time it takes for these guys to bring on new supply is a very long time. So I don't know what happens in that scenario. And then what if more money comes flooding in? They're going to keep the 30 million pounds open and just keep adding and stacking on top. We need another 5 million more, another 5 million, another 5 million, another 5 million. We're at 50 million pounds and this thing keeps, you go into like the biggest short squeeze that anyone's ever seen. And that's why I think it could be a big bubble. I mean, what I would do is look at your uranium companies, find the ones you really like, and just hold on. That's my viewpoint. Now, someone else asked on the channel here something about, okay, hi, Andy, what's your interpretation of Rick Rule's announcement he sold some uranium juniors? It doesn't bother me. He can do whatever he wants. I'm buying it and I'm holding on. We very well could have a pullback in uranium mining companies. We very well could. Some of them do look a little toppy. Some of them, I mean, if they don't break their patterns to the upside, maybe they'll pull back. Some of them look like they're going to break to the upside. That you can see both things, but I'm holding on. I'm not selling anything. I am accumulating. If I buy at a little bit too high of a price and it pulls back on me, I'm going to buy more. I'm going to continue to cost average into my favorite picks. Sometimes what I do is I put a little bit of money. I buy 1 or 2 shares of a company just to get it in my portfolio so it reminds me and gets that thing in front of me if I'm looking at my portfolio a lot. So I'm like, I want to buy this, but I don't want to buy it now. I'll get a couple shares and I'll watch it come down. And sometimes I'll see it and I'll say, ooh, it's cheap right there, and I'll buy it. I'm just getting it in front of my face. Sometimes I do that because I want to own it in larger quantities, and I just buy a share or two just to get it in front of me. So Rick Rule's announcement that he sold some juniors doesn't bother me. He can sell his entire portfolio and it still wouldn't bother me. I'm in it. We know the ratios are cheap. We know this is an undervalued sector. We know that the sector has massive inflows of money. We've seen big old chart patterns breaking. I have no reason to sell it. I mean, I think if you're selling uranium, you're crazy, but that's me. I take a completely different viewpoint. Some of these charts, yeah, some of them, they could go down. I don't care. Doesn't matter. I'm in it and I'm going to hold on. So I'm not too worried about that. Now, so that's the uranium side. imagine if more financial players start buying more residential real estate like Blackrock. They know it's of good value. They're coming in and they're outbidding everybody in Colorado Springs. Even they're paying 20 to 50 to 100,000 over asking to get these homes. They probably know that we are massively short in the residential real estate market. I mean, we have 0.2 or 0.3 months of inventory in Colorado Springs. Prices are going to continue to go higher until inventory is, we find inventory somewhere. Probably going to have to build it. We've got oil is historically the best hedge against inflation. Gold as a hedge against negative real yields, not inflation by itself. So inflation will create a negative real yield. And if your inflation rate continues to go up at a faster pace than interest rates, that's what creates the real negative yield. I don't think you can have it any other way. You can't have inflation go down and interest rates stay the same. So inflation in greater quantities creates greater real negative yields. Yes, oil is the best hedge against inflation. Energy in general is. I think uranium is too. And I had charts showing how leveraged uranium is, oil is, and natural gas. Those are by far the best investments with the most leverage to the commodity move is all those energy companies. So if you guys want a lot of leverage, I would suggest looking at oil, uranium, and natural gas. Those are the big boys. Natural gas, keep in mind that's a little bit more dependent on weather, because if a hurricane rolls in and it kind of destroys a lot of the offshore stuff, natural gas goes crazy because it's also a local market. Hi, Andy. Do you own or would you consider adding physical rhodium to your portfolio? Would you consider doing a video on the funds, stocks backed by physical metals that you trust? Right now, so rhodium's expensive. I would not buy physical rhodium. I wouldn't do anything with rhodium because it's historically expensive in relationship to the other metals. I like physical platinum. Physical platinum is the best of the group. Physical silver is a very close second in terms of valuations. In terms of upside, silver may have more upside than platinum, but that's debatable. So since I don't know which one has more upside, I just buy both. I buy both in physical format, and I buy some of the mining companies. Now, which funds, stocks backed by physical metals do you trust? Anything with Sprott, I trust that they're actually getting the metals off the market and buying the physical metal. But you can't, unless you have a massive amount of money in there, massive being a few $100,000, you're not going to be able to redeem for physical unless you have a minimum amount. Coming on down, it says, have you seen the battery technology with platinum group metals? They have a patent for. Not sure how good it is, but it sounds interesting. And I think platinum is going to work its way into all technologies. It is an exotic material that's going to be used in greater quantities going forward for exotic technologies. I think platinum is one of the best metals to hold for a long-term hold along with silver. They're both incredible metals. Moving on down. Now, here's someone made this comment. I don't know if anyone knows what they're talking about anymore about the market. And there is some truth to that. Everyone is speculating it. Everyone's looking at it different. And honestly, ride the trend. Just ride the trends. That's all you want to do is ride the trends. For uranium, so who is the biggest producer out of all of them? Cameco is a very large producer in Kazatomprom. Those two are the big boys. And then I think that's probably it. It's almost 10 minutes for this video. Here's another one. 3D printed housing is a direct assault against slow brick and mortar home building process. Technology, it is real and alive with homes already being built. In the coming years, it will be true competitive force, and I believe Kathy is referring to stuff like this when she speaks on technology and real estate. Also, it has already proven to be deflationary with the 3D printed homes being built with a fraction of the time and half the cost. The 3D printed house, I just don't know how they get plumbing and all this other stuff in it, and electrical and all that stuff. So that's the only downside that I see with these 3D printed homes. I don't know enough about it. I don't know how they run the plumbing. I don't know how they run the electrical. I don't know how they run it all through the house. So that'd be interesting, and maybe I'll do some research later on 3D printed homes. And then, I'll do another clip on this other one. So you guys, if you have any other questions, put it in the comment section. I love hearing your guys' opinions and would love to answer your questions. And thank you for listening. This is Finding Value.